how does the catch-up contribution work to your tax-sheltered retirement account in the year that you're eligible to contribute more? Do you get to use the entire higher amount, the full catch-up contribution, just part of it, or none at all? How does that all work? I'm going to explain that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, smash that thumbs up button. So I got a wonderful question from a client last week who's reaching a milestone birthday this year, turning 50. And she's someone who's very focused financially, focused on getting her, here are her big goals, getting her mortgage paid off so she's debt free and being able to retire by the time she's 60. She's single, no kids. Those are the big goals. And then the smaller goals of 2 vacations a year, replacing the car every 4 or 5 years, something like that. She likes having a nicer vehicle. So those are the big goals. And so she turns 50 later this year. And she said, hey, this is probably a dumb question. And I told her, no dumb questions, only dumb people. No, I'm just kidding. No, I said, no, bring it on. I love it. And she said, okay, so I turned 50 and I want to make sure that I max out my 401k contribution. I know I'm allowed to do the catch-up contribution, but because my birthday's in July, am I only allowed to do half of the catch-up? Thought, oh my goodness, that's a wonderful question, and not a stupid question at all, because number one, the IRS rules are just ridiculous. So you have no idea how those are actually interpreted. You actually need someone to explain how this stuff works. And then second, I love the idea of trying to contribute as much as possible, and you don't want to miss even a year's worth of those tax savings. Not tax savings, but also compound interest and building up for those big financial goals. So I thought, hey, I got to do a video about this, and I'll break down each account. So first, you've got to understand that each of these tax shelters has a contribution limit. And 20-some years ago, every plan was allowed to come up with their own limit, a percentage of income or whatever. And a lot of people still think, well, I'm limited in my contributions just up to a certain percentage. No, those rules are gone. 20-some years ago, that's how it worked. But now the IRS has one limit. It applies to everyone, okay? Unless you're a significantly high wage earner, and that's for a different video. We'll do a different video on that. But for the rest of us, okay, that one limit is up to 100% of your earnings, or an annual contribution limit for that type of account, okay? Whichever one's lower. So if for a 401k, the contribution limit, the annual contribution limit's $19,500, but you only make $15,000, well, you can only contribute $15,000. That's it. That's it. But if the annual contribution limit's $19,500 and you make $50,000, you can contribute up to this limit. There's no longer a percentage limit or anything like that. There's an annual limit that the IRS sets for each of these tax sheltered accounts. And then the year you turn a special age, and for retirement plans, that's 50, the year you turn 50, voila, you can all of a sudden do a catch-up contribution. And that sometimes even feels like a separate contribution altogether. And your 401k company or your provider might even say, here's your normal contribution, here's your catch-up contribution. It doesn't make any sense to me. It all works towards now a different limit. So you've got your normal contribution limit, then your catch-up contribution, that can equal your total, all right? So how does this work? And then I'll go back and answer the question that my client had. All right, for your 401k, 403b, now this is for tax year 2021, everyone's normal contribution limit is up to 100% of their earnings with a cap of $19,500, okay? In addition to that, in the year you turn age 50 or older, you still have that limit of you can't contribute more than you earn, but there's a catch-up contribution of $6,500, making, if you're age 50 or older, your contribution limit for that year $26,000. Now that's for 2021. That's the same as it was for 2020. So it's very possible it will increase in 2022. I sure hope so. All right, so that's it for 401ks and 403bs. And by the way, that's it for all 401ks. If you work multiple jobs and you have multiple 401ks available, you can't contribute more than this simply because you have more than one 401k at your disposal. That's the limit. Simple IRAs, if you work for a small employer, small business, less than 100 employees, and they've got a scaled down retirement plan, they call that a simple IRA, Savings Incentive Match Plan for Employees. Yes, that's an acronym. So your contribution limit here is $13,500, okay? Your catch-up is $3,000 in the year you turn 50. And at that point, your overall contribution limit is then $16,500, okay? So you're likely not gonna have both of these. You're gonna have either an employer that offers a 401k or 403b, or an employer that offers a simple IRA. So those are two employer provided plans. Then IRA and Roth IRAs, these actually have the same limit. It's a shared limit. You can't contribute the full maximum to a Roth IRA and the full maximum to a traditional IRA. You can't. You've got one limit that they share, all right? Now, sometimes it might make sense. Maybe in 1% of circumstances would it make sense to contribute a little bit to an IRA and the rest to a Roth if you're just trying to get your adjusted gross income below a certain threshold. But that's tax planning. Do that with your certified financial planner. And I've seen it happen when it makes sense. Oh, it's wonderful. But typically, you're going to fund all of one or the other. What's that contribution limit? $6,000 for everyone. Now you've got to have enough earned income, but for IRAs and Roth IRAs, you can't have too much. There's an upper threshold. If you make too much money, you're not able to deduct a contribution or you're not able to fund the Roth IRA. So work with your CFP on that. We've done lots of videos on that, not the subject of today's video. But assuming you're eligible, $6,000 is your normal contribution, and then there's a $1,000 catch-up once you're age 50 or older. So if you're 50 or older, your total contribution limit is $7,000. All right? Those are retirement plans, okay? And the HSA has two different unique features as a tax shelter. I'm throwing it up here so that you're aware of it. Sorry, I'm walking out of screen there. I'm throwing it up here so you're aware of it. The first feature is you've got to have a eligible high deductible health plan. And my penmanship is terrible. You guys know that about me, so I'm not going to write that all out. But you've got to have an eligible high deductible health plan in order to contribute to an HSA. Okay, not just earnings or whatever. You've got to have an eligible high deductible health plan. But then second, your catch-up contribution starts at age 55. Why did they change it? Why not make it 50 like everything else? Who in the world knows? Makes no sense. I have no idea why they'd make that one 55 and the other 50. If you're a representative, a congressman or woman, please take this up and consider pushing out a bill or attaching it to something else, moving this catch-up age to age 50, because it's just needlessly confusing. Just fix it. Okay, your HSA contribution, now these are for individuals, okay? It's $3,600 normal, okay? It's got to be up to your deductible, but most high deductible plans have a deductible at least that high. And then when you're age 55 or older, you can do an extra $1,000. So your contribution limit, $4,600. Now that's a per person. So if you're on family coverage, you can multiply that by 2. And then if you're on family coverage and you each have individual HSAs, you can times this one by 2. But if it's just one HSA, one family coverage, then this is only by 1. Confusing. But since I'm talking about catch-up contributions, thought I'd mention that. Okay, so that's how they work. Those are your limits. And if you've got some big financial goals that you're aggressively striving towards and you want to do so as tax efficiently as possible, you want to be aware of these limits and then work with your certified financial planner to answer the question, which tax shelters are appropriate for your overall financial plan? And how much are you trying to fund those? Are you trying to max those out, do a certain percentage, or what's your overall strategy? That makes sense in light of your entire financial plan. Now let's get down to my friend's question. In the year that you turn 50, or let's say 55. In her example, she's been maximizing her 401k each year, and is going to continue to do that this year, but turns age 50 in July. Therefore, does her catch-up contribution, is it all of this? Is it none of this? Or is it half of it? Is it all of it because she turned 50 that year? Is it half of it because she turned 50 halfway through the year? Or is it none of it because she wasn't 50 at the beginning of the year? What's the answer? The answer is you get to contribute this full catch-up contribution in the year that you turn 50, even if you turn 50 on December 31st. So you're 49 years old. For 364 days out of that year, you're eligible for that catch-up contribution, and you can do the full amount. It's not proportionate. You can do that full amount. And again, based on your work with your certified financial planner, looking at all 6 areas of your life, if your tax planning strategy is maximize these contributions, then the year that you turn 50, I'd work with them on your budget and your cash flow and your other goals to see how can, now that contribution limit went from here to here, what do I need to adjust in my life in order to hit this new contribution limit? And do I need to? And then if so, what should I adjust in my life? Same thing applies to IRAs, okay? Simple IRAs, that same rule. But then here for the HSA, it's the year you turn 55. But as soon as you turn 55, in that year, you get that entire catch-up contribution limit. All right, wonderful question. I can't stress the point enough. Make sure that of this list and any other tax shelters, 529s, whatever, you're looking and saying which of these makes sense for my overall comprehensive financial plan, and you're working with your CFP to figure out the right funding level for your situation. If you don't have a CFP on your team, you can contact one on my team. Find us online, korhorn.com. That's Korhorn with a K. wisemoneyshow.com. You can find us there as well, or just send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.